What is going on with the Canadian dollar? With where commodity and oil prices are trading at, there's no reason that the Canadian dollar should not be higher, and worth a further investigation to figure out what the reason is as to why we haven't seen it appreciate as of yet. But if this is your first time here, my name's Nick. Welcome to Waste to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on for similar content just like this. We're going to start off by taking a look at what the year-to-date performance is for the Canadian currency in comparison to the US. And we can see on this chart here that it is very stagnant. It's been trending around 78 to 79 cents. And for perspective, we did cover the Canadian dollar back in May of 2021, and it was trading at about 81 cents. So we've actually seen a little bit of a decline and really just a stagnant period. Now, to get an understanding as to what I'm talking about, it'd be best to take a step back and take a look at how oil and the Canadian dollar are related. So we see a chart here dating back to 2012, which shows the relationship between oil prices and the Canadian dollar. It is important to note that oil is about 10% of Canada's GDP, about 15% of the TSX, the Toronto Stock Exchange. So it still is a very important commodity for us. And we can see this relationship over the years is one that is very tight. They move hand in hand up until we get until the current time period. And we really see a huge divergence. So we see oil shooting at about $110 plus per barrel, but yet the Canadian dollar has not reacted, which is going to hurt us in a few different ways, which I'll pull up on this next chart here. This is a 25-year chart of the comparison between Canadian dollar and the US dollar. And back when oil reached these levels before, which was 2008, 2009, we actually saw our currency hit at par, if not greater. So we were able to have bigger purchasing power in the US. It also helped us at the pumps because it made that hurt a little bit less than it's hurting today. And because the Canadian dollar hasn't moved, you definitely feel it more now than ever. So we can see even in this chart here, it shows that the Canadian dollar hasn't moved, although it has been very comparative to where oil has traded in the past. So, I was racking my brain. I was, trying to figure out what the reason as to why this hasn't moved. And I found an article on the Financial Post here, and they quoted Douglas Porter from BMO. And he said the reason for the weaker link is that capital spending isn't expected to respond to higher energy prices due to ESG and the push for clean and renewable energy. So back in 2015, oil did drop super low, and then the Canadian government had to react and drop interest rates. And really what we saw is that was a huge moment for investing in oil because it almost dropped a third. We do not invest as much in our oil sands as what we were doing back before 2015. And I think investors and the world is really weary of this, and they understand that this is a huge factor moving forward, is that if we're not investing in our oil sands, if we're not investing in oil and gas, then we're not going to be outputting more, and we won't be benefiting from the higher oil prices much like we did in the past. So this is kind of the reason as to why I think oil prices have not followed, or Canadian dollar has not followed along with oil prices. And I don't know where we head from here, but if we consistently see this falling off, then I couldn't see it moving any higher. Now, I know the Canadian dollar did come off a good week, and that was based off retail sales numbers. And then there's also a underlying connotation that the Bank of Canada is doing the right thing by being hawkish, meaning raising the interest rate in order to combat the inflation. We had an inflation print this week that was 5.7% year over year. So if there is a little bit of a policy mistake that happens there and the raising of the interest rate does not combat the high inflation, then we could see the Canadian dollar fall even lower. So there's not too many bullish effects that are leading into the Canadian dollar moving higher from here, but it is still trading at a relatively standard rate of about 79 to 80 cents of the US dollar. So let me know what your thoughts are. Where do you think we head from here? Do you see the Canadian dollar moving higher, or do you see it moving lower? And if you're still here with me, please hit that like button. I definitely appreciate that. And please hit that subscribe button as well. I hope you all have a great week in the markets. Happy trading.